Hello, investors. This is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Wednesday, February 26th, 5 p.m. Eastern Time, coming to you with tonight's Revere Roundup Daily Market Insight video. Market state, we're still in a short-term pullback, correction, whatever you want to call it. And if we look at trend gauge over here, market leaders still have the red arrow. Pretty weak bounce attempt for many of the names that have taken a 20 to 40% haircut in a matter of days. Continue to trade below the 21 EMA. Medium term yellow sub arrow there. Tried to rally above it today and failed. And then small and mid caps, relative weakness. Long term, we are trading above the 200-day moving average, but small caps, some relative weakness. Um, Basically, what happened today, index is below key moving averages, leaders weak bounce, and that was kind of summary of today. 21 over 21 list still under construction. Big 8 essentially flat, up 0.04%. RG8 up 0.92%. And then 60/40 up 0.21%. And GROTECTION flat as well, pretty much down 0.01% on the day. Let's take a look at the inter-asset correlation and start with chart the S&P 500. And you can see, try to rally up into that, try to get back above that 50-day briefly in the morning, and which coincided with that 6,000 level, but rejected and closed near the low of the day, although still holding the 100-day moving average. But obviously, the market win isn't behind our back right now, and you can see that from like just analyzing leading stocks. Plus, the indexes aren't really giving favorable action either. So we'll see. See if we can start to make some ground and get back above 6,000. And then another thing is this 21-week moving average. This whole run since since the lows here started, every pullback has been contained and closed above that 21-week moving average. So now we're on the verge of a close below. So definitely a little caution there. RSP just, in this tight range, see if it can resolve to the upside. Qs again, failed breakout double top here, holding the 100-day, but below a declining 21 and 50-day. If that 100-day breaks, this 503, 500 level is some next support to the downside. Then you have the 200-day down below. And as you can see, this one's losing the 21-week moving average as well. Mag 7, big relative weakness in med cap tech. A lot of them are rolling over. You can look at Microsoft. This one looks like it's in a stage 4 decline. Google, this one lost the 200-day moving average today. Meta, definitely holding up better, but still a just sharp pullback off the highs. Amazon, a little bit better, trying to hold the 100-day. Apple's holding up relatively well compared to them, but again, no relative strength for months on end. And obviously, this is has been showing a little bit of strength lately, and that's likely due to just the defensive nature. Apple almost can be treated as like a defensive stock if people are fearful. And then Nvda earnings, which I'll cover later. Dow Jones, again, weakness, tried to rally up, break out through these highs, rejected, now starting to roll over. Mid caps trying to hold at the 200-day moving average, again, very weak. Russell 2000 tried to rally up against this 200-day, again, super weak. And this is looking to have its first close below the 40-week, which is also the 200-day moving average, really since this rally kicked off all the way back in 2023. So, hard to deny some of the red flags that are forming right now. ARC, just huge. From failed moves come fast moves, right? Looked like it was breaking out. Sharp move down. Take a look at the weekly. Weekly looks a little bit better. This one's kind of pulling back to this weekly breakout level. So if this can hold, that'd be a good sign. FFTY, again, another good depiction of leaders. Just looked like it was breaking out, smoke to the downside, sitting at the 200-day now. VIX, given the big moves down, this is still stayed relatively tame. Closed up about 1% today and still under 20. Dollar continues to come down. Gold consolidating at the highs continues to show strength. Gold stock, same deal there. Bitcoin, big downside break today, and this is breaking the range to the downside and the 100-day. So potentially trip to the 200 days in the cards today. And then before that, a potential support is this 42 level. This is that big base breakout level all the way back here. So if this comes, watch this 42 level on IBIT to hold. That's a huge spot. Weekly, starting to look a little ominous. Just it was looking fine for a bit. Obviously, this was just consolidating in this weekly base. Looked like it was forming for higher. And then price given confirmation to the downside here with this break. And again, watch it against this base high, see if it can hold. Also got this gap here. Bonds, definitely relative strength here coming back in, obviously with the recession fears rounding back up really nicely. TLT, same thing, flocking into safety with the recession fears. And that coincides with rates breaking down. And typically, these macro correlations always change. So you always have to be like, what's the market narrative? And for a while, when rates came down, that's when you saw those nice, strong rallies in some of the rate sensitive sectors, stocks, ARC, regional banks, biotech, et cetera. But now, with the market more fearful of a recession, rates coming down, bonds being bid isn't so helpful for the market. That's the inter-asset correlation. Let's take a look at the tape. Let's see. So mentioned VIX, fear and greed into that fear, extreme fear area coming down. So sentiment wise, as a bull, good to see that coming down. We had Nvidia earnings today. I'll cover those. Tomorrow morning, we have GDP. Friday morning, PCE data. Today's keys, all red arrow there. The S&P failed at the 50, trying to hold on to the 100-day. Qs failed at the 50, trying to hold on the 100-day. And then IWM closing below the 200-day moving average today. Down 4 days below the 8, 4 days below the 21. Sectors wise, China continues to be really strong. Semiconductor, software, tech, aerospace and defense, utilities all seeing some relief bounces today, and then weakness. Bitcoin very weak. XLP pulling back. And one thing I want to highlight with XLP is that, we talk about rotation a lot. And obviously, in the last couple of days, there's been some nice moves in some of these defensive names, like PM, that's a tobacco stock, J&J, ABBV, healthcare stocks, and they started to accelerate to the upside. But this rotation often tends to occur when growth stocks are still working. So sometimes it's an opportunity cost, right? If you still have Palantirs of the world that are still going up, you're not going to be looking at staples as much. And then once they tend to look so good, that's obviously sometimes when they start to pull back, and you're seeing that with XLP right now. Home builders were down on the day, oil, healthcare, and energy. No trades today. Holding no individual names right now, just some of these S&P exposure from lower and gold. So 0.47 beta and 2.05% open heat. IBIT should be out of here. I didn't change that, but we currently own no IBIT either. Bottom line, weak bounce attempt from leaders and indexes below key moving averages. Let's take a look at some of the earnings. So Nvda. It is currently up about 2.5% right now, and wasn't too bad. They beat on EPS 89 cents. Expectations were 84 cents. Revenue of 39.3 billion. Expected was 38 billion, but seeing a bit of a deceleration in that growth story, and the growth story just isn't as prevalent as it was, a year, 2 years ago. But their data center revenues rose 93% year over year and 18% quarter over quarter as well. So we'll see, still big range. Essentially, this just still has gone nowhere for months on end. And now it's at 134. So, kind of railing back up into here, but still, just, no strength. It's not giving you not a good trading vehicle right now. We'll see. Maybe this can get momentum, see what it does at the upper end of the range. But every time it's gotten up into this upper end of the range, it's tend to have gotten rejected. CRM also reported after hours. They're down about 2%. And then Snowflake, this is the big winner. This one's up 11% at $184. So coming back up into the top end of the range. And they reported EPS of 30 cents, beat expectations of 17 cents, revenue of 986 million, beating 955 million expectations. And they integrating Microsoft Azure OpenAI service to provide access to the latest OpenAI models with expanded Microsoft partnership. So this one still got a pretty good turnaround story taking place. Obviously, we stopped out of this one as it had a harsh break off the highs. The one starts shape back up. This could be in play again. So good to see this one gapping up. Could be good for the software sector. Take a look at IGV again. It's come down with the market. It doesn't look horrible. Just likely needs some more time in this space settle out. We can just take a brief look at the 21 over 21 list, although it is under construction as Futu strength in China. This one's building the handle out. These China names are acting extremely well. HIM's up 5%. Like I mentioned, these are some of these just dead cat bounces. 40% haircut off the highs, held to 50C, but a lot of overhead, tougher trade now after that 1 day bounce. Dash, this one's held up extremely well. C Limited, another one that's held up extremely well. WGS, it's another healthcare one. It's held up extremely well. Bros holding up better than most off the 21 day. Spotify, back above that 600 Livermore level, and again holding up better than a lot. Palantir, fund support at the 50-day, up 1.5%. But again, in my eyes, after 5 days of selling, 10, 20% haircut, quite weak bounces, and basically just an inside day. Docs, another better looking one, but closing near the lows of the day. AEM for gold, this one's breaking out of a nice little flag here. This one looks really good. Eli Lilly, major relative strength for this one this year. This one's up almost 20% this year, back above all the moving averages and coming out of this tight this tight consolidation. And yeah, it just fits the narrative of some rotation in some of these healthcare names as well. Let's take a look at HWM. Aerospace and defense sector is up today. This one's holding right at the highs, looks pretty good. Uber, another winner this year that's been strong, very weak towards the end of 2024 and has started to revamp here this year. Looks, just holding up in the upper end of the range. MP, this one's got a nice little flag up here. VRTX, hanging up at these local highs. Starbucks, another nice winner after this earnings gap has just trended up really nice. Cyber pulling back into the 50-day. Costco holding up here, holding above that 1,000 level, and this base breakout. Race, they announced this one was looking pretty good, and then they announced an offering today and just got whacked. And that's what you sometimes tend to see in a choppy / weak market is sometimes these good looking setups, they just have a much higher value or much, they fail a lot more often. And that's why, sometimes we say is the environment's more important than the setup. APP, this one got hit with 2 short reports today and just shows some of these high flying beta momentum growth stocks have just gotten crushed, to say the least, all the way back to the 100-day, 20% plus haircut off the highs after this earnings gap. And, these charts just need a lot of time to repair. And then CART, another one, thought it was looking good, right? Breaking down to highs, earnings come, gaps down, and falls through the downside, getting crushed. So yeah, that's the 21 over 20. You still have some that are holding above the 21, but a lot are getting crushed. So some charts of interest I want to talk about. So we talked about China. We can just pull up KWeb. This one looks good. It's obviously gaps with the overnight trading, but this one's holding above this base, flagging out. Clear relative strength all year. China, KWeb FXI is crushing every market this year. BABA's arguably this is the liquid leader here, and this one's just flagging at highs, extreme strength. Futu's another one that looks pretty good. You got names like JD. It's got a big base, not as good of a chart as the other ones. What else? And then just talking about some of these bounces. Oklo's another one that got crushed. Bounce support at the 50-day, but again, in my eyes, kind of a weak bounce. NBIS, weak bounce, still got this declining 21 day, kind of in no man's land. These charts are just, they need some time. And then Reddit is another one. Try to hold like the low of this base. It's kind of in no man's land. This one had a little bit of better of a bounce, up 5% today. And then some of these utility GEV, that's another one. There you go. GEV held the low end of this base. Still just a lot of overhead choppy action. And then VST is another one. Kind of tried to find support at the low end of the space, and then just got a lot of stuff to work with these overhead supply, and it's very choppy charts. Kind of the environment is, buying the flushes and selling the rips, but it's easier said than done. And then you can see the rotation, a lot of these defensive names. Philip Morris, after this earnings gap, no one really talked about it, just steadily trending higher. You have ABBV trending up the right side nicely. J&J, huge move off the lows here, moving higher. So you can see, but XLP was down today, rejecting these recent highs, but maybe this one handles this and money continues to stay into defensive names. This could be a viable option as well. And then, I also wanted to cover Robinhood. This one's holding the 50-day as well. It was up 6.38% today. And, if this can start to remount up here, build a bit of a tight range, that would look good. And then one last thing I wanted to cover today, semiconductors, obviously Nvidia, let's see what it's at now. Up, just flat, not much of a reaction. But looking at this chart, I actually posted a tweet on this about yesterday, but just, we're watching this on the downside as well. Now, if it can get back above all these moving averages and take out, I think that'd be great for the sector. But, you look, this topped all the way back in 2024 in July. And some of the best shorts tend to happen, 5 to 8 months after the top. This is about that time frame right here. You have the 50-day crossing below the 200-day, which is, trend confirmation. Multiple failed rally attempts above the 50-day moving average that got met with sellers. And now you have this big range here. So if this breaks to the downside, this range, I would watch this as well. Likely would not be good for the market, but just going to follow price. We're open to either scenarios here. If you look at the monthly, essentially 9 tight monthly closes with less than like a 5 to 10% range. So the sector is definitely coiled for a move in either direction in some time. No idea when that happens. Maybe thought Nvidia could spark this rally, this sector up, but very unchanged. Just looks like a premium crush on this earnings, but we'll have to see what this has in store for tomorrow. That is most. And then last thing I wanted to cover is the seasonality chart. Seasonality has been tracking really well, and you can see we kind of topped in the mid of February, seeing that sharp pullback. March, the first half of March is a little choppy, a little more downside before typically seeing a nice end of month rally in March and nice trend all the way into even May for a brief consolidation. So market doesn't always follow seasonality, but nevertheless, it's a good thing to look at. And sometimes it can be a good guide. So that is going to wrap it. That's everything I got. Always like to hear from you. You can reach out to me via email at connor@revereasset.com. You can reach out to Dan or Don at revereasset.com. You can find me on Twitter at ConnorJBates_, and then our phone is 855-REAL-WEALTH, 855-732-5932. And if you're ever interested in becoming a client, as always, please reach out. And that's going to wrap it for Wednesday, February 26th, 5:20 p.m. Eastern Time. This is Connor Bates with Revere Asset Management. Telling it like it is. Thanks for listening. Have a great evening.